Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
You got me typing. Man. Okay, so yesterday, we listened to rock music. Never happening again. Every single one of those songs gave the video a strike. So anyways, let's look at the charts to see what we've got in store today. We've got a much busier news setup today. Of course, we've got initial jobless claims at 6:30, 8:30 Eastern time. But then we also got core durable goods, and then we got PMIs later, University of Michigan sentiment, and then the FOMC meeting minutes could be a big deal. Let's come to the charts here. So you can see yesterday's yen. I moved a little bit yesterday. Obviously nothing like days past, but it was moving. They were doing something. And I think it was largely moving because of oil here overnight. Kind of pressure to the downside, and that's what we're seeing here on the open in the treasuries as well. S&P 500, they managed a good rally yesterday. So, I should know. You know what? Coming back over here, there was yesterday a little bit more flattening. Like, even though we didn't move very much, flattened. Even though we were moving up, flattened. So yield curve not looking so hot. Oh, this morning the ZB is definitely like lagging. So that is not a vote in confidence. That is not that is not a vote of confidence in the economy, guys. Anyways, ES did well. Oil taking a dip this morning. We got more headlines here on oil. When did this start? 320. Now, that was not anything in my overnight minutes, so I'm not quite sure what's driving that, but oil down big. Silver and gold about where they were. Silver is still doing pretty good. Kappa. Love me some Kappa. Kappa kind of pulling back from its highs, though. On the upturn, but back from its highs. The dollar moved down yesterday, and it looks like they're maybe headed down again today. That would be a good thing for equity markets, but we will see. There's also a little bit of a buy overnight in Bitcoin, but they are still in the $1,600 range. So that's where we're at. We do have to pay attention today. They actually did end up moving here, didn't they? Granted, we're still just like at 3.8, but I don't know if it really makes sense to come in and take a trade ahead of the news, the economic numbers that we're going to get. Good morning, Mason, by the way. You're every day this week. I appreciate it. Because this is where, again, I'm like, I need to take notes on everybody that watches the stream. Mason was here every day. Radoslav, what's the activity before the holiday usually? Is it going to be a quiet day? So it can vary, of course. Isn't it always like the important and useful questions? The answers have tons of nuance to them. Well, I have seen some really monster trends ahead of the Thanksgiving holiday in the past. I have seen some really monster trends. Like, can I go back? Let's see if I can find some for you. Okay. I'm going to go back to TradingView because that is easier for me to go back and see like really far away. my data usually only wants to show you like a day or 2 years worth. So okay, so if we come back here, 2021 November, which would have been November, Friday the 27th, the 25th, Tuesday. So it was the Tuesday. So last year it was the Tuesday, not the Wednesday. Tuesday had a big day. And then we go back 2020. Well, I don't know if 2020 counts, but would be a good example. Yeah, 2020 there wasn't, but I think in 2019 there was. Oh, that was November 2019. That one happened after Thanksgiving. But I think it was 2018. Where we did, yeah. 2018 where we had like a really big move before it. Assuming it was that day. Was it the 28th or was it the 18th? Anyways, there was some volatility around that time period, right? We'll look at 2017 too, or 2016. Yep. Tuesday, Wednesday. Then it depends on if it's on the 29th. That was the Wednesday. Or the 22nd. That day didn't move. But in every one of those instances, you could see that there was at least one day that week that had a mover, right? And this is kind of more a general thing before a big holiday, is that usually one day that week there will be some sort of a distribution where they move, right? Since I live in Turkey, it's only in the afternoon when the US session starts. Yeah, well, that's maybe an advantage to you if you want to trade in the afternoon. I would note today, too, in particular, that the news, there was like hardly any economic numbers released earlier this week. It's basically all loaded up today, and you got FOMC meeting minutes. So, and although the open was pretty quiet, they did move here on the open. It was to the downside. Big spread there in the micros now that we're a minute out. So it's possible that we move today. Hey, thank you very much, Meishan. Make sure, we have the Discord. There's a channel in Discord you can get into. It's not super active, but, that's because some people, we kind of changed that after the fact. But I appreciate it, so make sure you get use of that. Some things you have to remind me. Okay, so here comes the news. The micros have completely pulled. Initial jobless claims were looking for 225, and durable goods were looking for 0.4. Oh, it's moving. Okay, 1% for durable goods. So, and jobless claims higher than expected, 240K. So I'm not quite sure how you sort that out. It's durable goods is one that I'm not as clear how it will affect the markets. Holy shit, what the hell is gold doing? Gold just took a total. Did I get a haircut? No. I never. Are you making fun of me? Are you making fun? Come on, look at. I shave it like twice a week. I mean, based on the jobless claims, I would think that the treasuries would rally, but durable goods, I'm not sure. That move in gold is weird. Did silver do the same? Silver did similar. And the Japanese yen moved up, and the treasuries, well, the treasuries did move up. You know, micros kind of, well, you know, so like in the micros here, I'd be like, you know, if you filled me, I'm not going to hit into 77. That's a ripoff. Somebody wants it. Look at him. He's like, come on. I'll be the one put my thumb. Look at how many of us are there? 1, 2, 3, 4, 5, 6, 7, 8, 9. So the 9 retail traders that are trading this micros have limit orders out to go short rates. I don't know, Lucas. That I mean, that would be a situation where I think I would have needed to have the DOM up to understand what happened. Well, they filled me. Somebody hit back with a big clip. But it is moving down. Whoa. What the fuck? What the fuck? This is weird. Okay, I have never seen anything like this in the treasuries. I think that part of this could just be that there is not as much activity out here because of the holidays, but there are some informed traders out there. But that really was like, what the heck? Can we blame the curve? I don't. Well, so something I am seeing, my 2 and 10 year spread is flattening, but everything else is steepening. So it probably is the case that something funky is going on in the spreads. It was like somebody sold and then somebody else was like, oh, no, and bought TF out of that. That was nuts. Wowzer. Well, I can't believe I got like a decent position off of all of that. Lucas says I'm impressed. It was weird. It was weird, wasn't it? I mean, the liquidity is low. Like, look at the liquidity. They're only putting out 500s. What just happened in gold? Good question, Meshan. We're still trying to figure it out. It you know, the markets are a little illiquid here. It does look like the market is saying this was, you know, oh, I don't like that. Seeing this iceberging here and everything, I think that they probably could continue through, but that gives me, you know, I got a good spot in a good trade. That means this is a good spot to distribute out. See, the volume is hitting both ways here. Iceberging both sides. Buyers win. Not a strong bid. Ticks back down. Some more hitting into 16. Jeez. Okay. There's the offer goes through and 2 ticks down. the spreads here and everything are not helping. You know, in gold, it may have just been that all of the orders pulled and it was just a few orders that hit to the downside, but it was pretty wild and bizarre stuff, wasn't it? But I mean, we were seeing wild and bizarre stuff here in the treasuries. Even on this pullback here, you know, that's a pretty aggressive pullback. Reached my target out from NQ, but I was not bad. Well, in action like this, that, you know, in action like this, you could get situations where if you had any kind of a position open during that news, that you could have had a stop hit or something like that, right? Like even in the treasuries, there was a big sell first before it went gadoosh. So I don't know, man. That was some of the most interesting order flow we've seen in a very, very long time, wasn't it? Like it was just like 10,000 contracts out of nowhere. Does it look like it's possibly going to retrace? I believe, I mean, I had orders out at 30, so I did recognize a good spot. Probably could have, well, I don't know. The spread was really wide. When the spread is really wide, it makes it difficult for you, man. But you can see those bids are kind of like flighty, right? He'll put the 71 out there, but then I'm interested to see what the dollar and the 6J do from here. Those are probably going to be the deciding factor about where we go next. They are trying to bid it back to 13.5 and not getting a good bid here in the 10-year. Okay, finally a bid there. And a bid at 14, although very small one. Okay. Okay, and now 14.5 goes. And it looks like the 5-year pushing them. Well, you know, when I think about it, like trying to think about the numbers. So US durable goods, that is a number that I can't ever remember there being like a really serious move off of it, and it's what its actual impact on the treasuries would be. I'm like not really very that's probably my least familiar number. You know what I mean? And but the US initial jobless claims, that was 240K versus 225. So that is pretty decently higher than anticipated. I would say that's a big deal. Zero Hedge has been saying for like I want to say like the last 6 months that by December we'll be getting like negative jobs created numbers, and just that one print out there makes me think that they stand a very, very good chance at being right now. I think that they were getting that from like Bank of America analysis or something, but I think that stands a very, very good chance of meaning that the December jobs number will be negative. Of course, let's not call it before it happens. Will that be next Friday, right? Yep, it will be next Friday. Kind of the issue right here is that I have to spend like $5 or $6 to get out, unless I'm gonna have a limit order move against me. Like if I bid out at 15, I don't think they would fill me. and there is a little bit of back and forth here. Like the cumulative delta is sideways, but they seem to be hitting both ways here around 13.5, 14. When volume is low, I assume anything causes these moves. It does seem that there are people that decided to take a holiday today, huh? I mean, I say plenty of reasons to be trading, but you can see just from the liquidity that at least one major player decided not to play today. Okay, well, that is a hit a little bit lower. S&P 500, after having after also moving up on that move initially, is starting to turn to the downside, and we are seeing the dollar coming back to unchanged, and now I am about break even. This really sucks. I mean, I wanted to be out at 30 and I just didn't get fills. It's on a short squeeze. I don't know. So this spot right here is where those like contracts that hit in really aggressively came in at. Although I would have to think, if that was like a short-term trade, that he took it off at 16. The deltas are not giving me any clues yet. It's still unclear which direction those are going. It looks like that this move down a little bit lower has been driven largely by the dollar. Okay, I heard a click, but I didn't see where it was. It was a bid pull. At 08. Oh, they added and then pulled. I think I really have to think hard over this Thanksgiving holiday about these trades that we've tried doing in the micros during the more crazy kind of action, because the way that the market maker has been functioning has really worked against me, hasn't it? Look at that. Like I would maybe be like thinking, looking to get into a position here rather than sweating out holding a little bit of adverse excursion like I am, right? Well, it's still trading here at 10. It could just be the dollar, but it kind of looks like that there could be some flows here today that kind of contradict the economic news. Okay, well, that's a little bit better. See, if the liquidity was like this back when we were at the highs, then it would have been fine, right? But they literally held the spread in a way to squeeze anybody that had a good position in. They held the spread wide for 20 minutes. Okay, so we're back to VWAP at 12. Still going this time. This time, though, it looks like it's being led by the 30-year. And we're getting a little bit of a flattener. So up but flatter? That would make sense to me. I mean, that's what we saw yesterday. So I kind of think that, like, when I saw that yesterday, I was like, that's interesting. That hasn't happened in a while, but that's probably exactly what should be happening in this situation, is rates going lower, but the curve becoming flatter. Yeah. Not a vote of confidence in the economy, right? We've gotten decent bids when they tick up. They're not holding, but there is about 300 contracts kind of chasing behind it. Okay, so we're back to 13.5. All that to come back to 13.5. It's kind of I'm seeing something kind of interesting, which is that it seems like that when we tick up, it's the market orders in the 5-year that seem to be the most active. But the 30-year is moving more. You guys gave a good pullback and gave my target. Wow. Well, wait, was it really 30 ticks? No. Well, you must have been in for much longer than that. Okay, maybe we're gonna take another hit at the highs. Let's see. Well, I tell you what, if they reached the highs here in this situation, that would be incredibly interesting to see. So when I look at the flows, I do not see a, well, I guess there was a sell in the 30-year, but the 30-year has already reached a new high in cumulative delta. So above 16.5, could we start getting some stop orders? I you know, like I said, because the cumulative delta is sideways, I don't know if there's a whole lot of like people caught underwater, but I guess we'll see. If they go. See, it's like the 5-year is trying to drive the move now, but it's not really going because the 30-year is not doing it. Yeah, crazy action. It certainly is because some people thought that today was like a no trade day. I don't know how many like retail traders actually participate in the 10-year treasury. I don't know how many like quote unquote speculators there actually are out there, but I think that this shows that like what we do does have an impact, you know, here on these instruments in aggregate. And so a lot of people yesterday were saying like, I think that people are already gone for the weekend. And I was like, no, because he had the treasury auction yesterday, which was an important treasury auction and was a complete disaster, by the way. And then you've got FOMC meeting minutes today. What could be bigger than FOMC meeting minutes today, right? And we do have PMIs in 45 minutes as well. Those are pretty important numbers these days. And we have University of Michigan sentiment. So there's plenty of stuff to be trading here, but some people decided they were gonna leave, and so we're ending up with an unnecessarily volatile market. Is how I would put it. Well, they're still having trouble holding above 14. I swore not to open trades on the FOMC. I don't think with micros that I will be taking any trades during FOMCs or non-farms unless we see things in the micro 10-year really thicken up. Maybe someday. But as of late, it's like even off of this news, right? You get the move going in your direction, but they're holding like a 5 to 10 tick spread. So even though you're right, you don't really get paid what you should. Like basically what ends up happening, right, is all of the informed traders, they know what's up. They go the same way. And so the market maker holds the spread disadvantageous to you to squeeze you out. And so they get squeezed out. That's what I think basically all of that like down movement was about. Because there was not serious cumulative delta behind it. it also looks like it's being driven by the dollar. That's another thing that's going on. And we're not quite sure what the dollar's going to do here. So I'm also seeing like they're making progress, but then it gets smacked down to 14 again really quickly, right? I would like to see a breach of those highs, but at the moment, the signs are not encouraging. Probably if it does it, it'll just be like all of a sudden it's up there and you blink and you miss it. Did see 6J go higher. That's interesting. Okay. I just heard over the news squawk that Germany is proposing a 33% tax on oil, coal, and other energy firms. So that's really dumb. I think that we need to help our European friends learn economics. I really do. I mean, like I'm seeing the Democrats in the United States make some dumb calls here on the economy, but the Europeans are really doing dumb things. Like they seem to be completely clueless, don't they? Yeah, that'll ramp up exactly. Guys, if you tax something, you get less of it. Why are you taxing the thing that you need more of? It makes no sense. Now, you know what? If you're a liberal, it makes perfect sense, but eventually the economic realities will catch up to them. Okay, here they are back at the top of the range. They breached 16. Good luck talking anyone out of MMT. Is it? I don't even think that it's really MMT. So I give you an example here, Uzi. I read this article. I posted it in the economics channel of the Discord. It was a really great article about housing, because housing is a really big issue. And the article was basically how many houses do we actually need to build? And the answer was actually like, it's a really complicated question, but a lot. And I mean like insane numbers. Like there's no way that we would ever build enough, right? Even if we come in and we make a ton of policy changes to encourage more home building in the United States, we're still going to be in this situation where housing, especially in urban centers, is difficult to come by for a very long time, right? And one of the things that they mentioned in that article is that there is something called like a supply skepticism. Basically, people in liberal areas are skeptical that building more housing will actually bring the price of housing down. And what will happen is a house will go up in their neighborhood. And so they'll go, oh, okay, there's a new apartment building. That should mean more housing. And so the price should come down, and it doesn't. The price actually goes up. Because what's happening is you're not actually getting a whole lot more supply in the city. All you're doing is you're just making that one area nicer. And so the rents go up in that one area because it's newer and it's nicer. And so the liberals in that area develop skepticism that supply will make things better, right? Even though there's study after study after study after study that shows that increases in housing supply brings rents down. So there's this thing. I don't think that it's modern monetary theory. I think that there's only a small section of the left that truly believe in modern monetary theory, but it's just that there's a pretty big portion of the left these days that are in just complete denial about like basic economic facts, as basic as literally supply and demand. Can you believe it? And the same with taxes. They do not understand nor believe that taxing something generally means less of that thing. But it's just basic math and economics on that one. The modern monetary theory thing, though, the thing that's interesting about that one is watching the influence. So here's the thing with modern monetary theory, okay? If I can get into this a little bit, because I keep a close eye on it. I would like to argue a lot about modern monetary theory, but they just ignore me. Everybody on TikTok just ignores me, so I don't have a big enough following. But modern monetary theory is mostly being promulgated. What's the word? I don't know how you say that. It's being pushed by like one economist. Okay, this Kelton lady is like, everybody says, oh well, but have you read Kelton? Right? So if you read it, then you would understand it, and you see that she's correct, and etc. etc. Promulgated. There you go. Okay. And no serious economist, okay, there's not a single like serious central banker out there that endorses modern monetary theory. Okay, there are some things that they kind of get right, okay, but no serious economist is seriously promoting that. All right, it's these people kind of out on the edges, but then there's this huge consort of influencers behind her, right? So for instance, there's these like the Young Turks. They love that shit, and they have their main economist girl. She is totally pushing the modern monetary theory thing, right? Okay, so that's kind of the background. So the thing that I think is funny is that in all of the serious economic circles, what has happened post-COVID is basically proof positive that modern monetary theory is a bad idea. And it is funny to watch the modern monetary theorists try and you know, explain their way out of this hole that they've built. You know what I mean? Like, come on. It's obvious to freaking everybody that those policies that they did where it was like, oh, we'll just print tons of money and worry about it later and it won't be a problem, clearly didn't work out that way, did it? And so they have to try and shift the blame to something else. Well, it would only work if not for the evil corporations that want to try and price gouge us. Guys, price gouging is not an actual thing. Okay, how can you say this price is fair and this price isn't? That's not how a market works, folks. We live in a free market. The only way that price gouging can actually be like an actual definable thing is if you say, well, we shouldn't actually have a free market. You know I'm right. Yep, so the solution is now modern monetary theory plus price controls. That's exactly what they're promoting. I know, right? It's just crazy. What's your take on oil? You know what? I don't know what's going on with it, Morgan K. I think that there's a headline there that I missed. But it was not in any of my morning rundowns or any of the information that I was able to read before we started trading. And we've been so stuck here watching this craziness here in the treasuries. I mean, it is kind of crazy for the treasuries, right? Morgan, okay, so it's not just me. I know, right? But you know what? Like, here's the thing with oil. So, you know, it was only 2 days ago, right, where we had this story that they were going to increase supply that was complete and utter nonsense, right? So there is trade going on in oil, and we don't completely understand everything that's going on at the moment, is really the gist of it. Yeah, go ahead, put price controls in place and see how the supply of whatever you try to put a cap on goes away. Yeah, exactly. Because well, even if you just tax them, let's go with the current proposal from the Germans, which is that we're going to tax them a ton, right? Okay, so if you tax them, that's less money that they can put into developing their oil and gas leases. Okay, so that's number one. But then number two is, why should I expand my business if the government clearly hates me and is doing everything they can to try and prevent me from making money, right? That's a big signal that you want to put your money elsewhere, right? You don't want to go and buy the stock that the government hates. I'm telling you, I've done this trade, okay, where it's like, well, the government wants the price of oil to be lower, but I'm going to buy it because I think that the government is wrong, right? I mean, sometimes you get out with that, but sometimes you get beat up. You don't want to trade against the government, okay? And if your stock is being singled out specifically by government policy, investors ain't going to put money in that. And what does that mean? Less money to be able to invest. So yeah, you're just going to get less of it. You're just going to get less of it, right? And what ends up happening is if you put a price cap on it now, okay, so you don't get enough supply, it goes up. So they say, okay, we're going to put a price cap on it. Then what happens? They just buy everything at that price, and then there's no supply at all, right? So now the oil company doesn't make money from doing things right and providing the supply. And yeah, the price doesn't go higher, but you can't actually buy any because everybody just bought it all up, right? It just creates more problems. And like the insane thing about it is that we learned all of this stuff in the 70s. Like we knew this stuff, and the economists said this is what happens, and then we tried it in the 70s, right? The freaking Nixon tried price controls, right? I mean, I think the left did it too, but Nixon was the one that most prominently did it. A Republican, can you believe? Yeah, Nixon did a couple of dumb things. He did a couple of like really smart things and then a couple of really dumb things. We knew they did it anyways. We saw the effects. Everybody went, oh yeah, that's a bad idea. So we shifted back, and then it's like we didn't learn the lesson, right? We've been fighting for the last 50 to 100 years in economics. We keep fighting the same battle. And this is like the second or third time now. Or actually, it's not. I think it's like the third or fourth time. But and it's because certain political positions basically encourage people to stake up claims that are just contrary to sound economic theory, and the public falls for it every time. There's a book on 4,000 years of price controls and how it consistently fails for 4,000. Really? Maybe I should read that book. You know what? There are so many books about economics that I could probably read that, but I just don't have time. If I didn't have a day job and I didn't have ADHD. You know, I was watching this video the other day. It was an Andrew Tate video. Well, it wasn't a video. It was a TikTok. I would never intentionally pull him up. And usually when he pulls up on my feed these days, I just keep going because usually I've seen them or they're just stupid. It's either like the good ones I've seen or he's saying something moronic. But this happened to be one where there was like a more expanded bit of something that I had seen before. It was basically like, I'll tell you how to make money. Here's how things work is you go and you make a business and you bootstrap it. Is basically what he said. And he was like, well, if you can't make money, then it means that, well, you know, here's all the excuses that people make, right? Well, they don't have enough money to do it, right? That's why he's saying you need to bootstrap yourself. And I was like, well, no, that's not my problem. My problem is I just don't seem to ever have the attention span to completely follow through with all of my ideas. I have more ideas than I have attention span. And what you see me do here on the channel, I don't post every day. I mean, I don't post every week, right? But what you see is like the max that my attention span is capable of putting out, right? So I wish I could read more. But I also kind of wonder sometimes is like how much can your brain actually hold? At what point do you get to where you're like learning stuff and like other things are like being forgotten? Or is it really like our brains are like quantum computers with like infinite memory space somewhere in the quantum realm? That would be interesting. Anyways, I digress. Google, it goes back to the Egyptians. Wow. I think that if I was going to be making that kind of an economic, I mean, I guess I am making that economic argument, but let's say that I was somebody that was culturally significant and me putting a lot of effort into explaining this thing could have a potential impact on society, right? I would probably be ignoring anything that happened before World War II, right? I would be more interested in how do these dynamics play out in the modern world. Modern world meaning post World War II, right? So they did it in the 70s. It didn't work. Okay, well, they've kind of been... I actually suspect, well, I don't know. So hold on. So I think what's happening to me here is we've seen a trend move up, and so now I'm going to want the trend to just continue and continue and continue. The overnight high and weekly highs are at like 22.5. So just kind of a little skip above us. But we didn't quite get there. Okay, I'm gonna get out. To be honest with you, I mean, I was able to relax after things started going my way. But that was a really, really stressful trade, man. How much did it go against me? I don't think it actually went against me that much. Okay, it went 14 against me. So 2-1 is still good. 2-1 is still good. They did fill me. Where did I get it at? 350? No. Yeah, 749. So let's just say 750. Or 375. I got out at 375. Now let's see if they continue and I regret. Yep. Sometimes I think about this and I'm like, what if, okay, so like there's somebody out there executing a large meta order. Maybe he's somebody watching this stream. And so like I get out and he immediately pushes it out. Why would he do that? Because he wants to say, Seth, I wanted you to be in on this move. And I'm trying to show you that you should stay in it. Well, I made my choice. My issue is, the reason I got out there is that we did see some counter order flow up here, right? So, the cumulative delta is still rising. So there does appear to be some sort of meta order buying. It's not huge, but there is some sort of meta order buying. But we are going to be coming into resistance, right? I don't think that you get a very good probabilities, risk rewards, etc. on whether or not we break 22.5 or not. And that kind of makes it, for me, a good exit point, right? Is like, okay, so we're getting a good meta order buy. We buy up until the next point. I get out. If they go further, cool. But I don't have to take the risk on that because I know that my risks decrease at that point, right? Plus, we still got news today, right? Yeah, selling has come in this area the past couple of days. Exactly. So that's why I felt that it made sense to take profits there. Because even if we breach the highs here again, I'm a little bit skeptical about them getting 22.5. Getting through 22.5. And then if they get through 22.5, I'm a little bit skeptical about them getting past 25. At least before PMIs. and then the 8 o'clock news, right? So, plus it was really stressful, and I feel like I need a little rest. You bought RSI 30? No, I don't think so. You never told me what the period of that RSI was. I don't understand how you can like, I gotta be careful here because I don't want to call Ish like an idiot, but like I went and I showed you the performance of this over 5 years, and that doesn't give you, oh, it's a secret, huh? Oh, that kind of pisses me off. Now I'm gonna embarrass you. Ancient Chinese secret. So we got to bring this down so that we can see the tenure, okay? So if I come here, I should be able to pull up the ones that we were doing yesterday, right? There we go. Okay. So which was the one that worked out the best? It was a 28 tick stop and an equal risk reward target is what it was. Okay. So I'm going to do an optimization. We're going to use a minimum period of 5 and a maximum period of 90. We're going to increment by 5. We're going to use equal risk reward. I will give us different stops though. Let's start. I'm going to keep it wide. So I'm going to start 8 to 32. 5/4s. Okay. Underbot, overbot, 60/40 run. So you don't have to tell me which period it is, because I can basically use my computer to try every single freaking one that there is. Still going. It's still going. Should have stayed. Maybe I should have gone for $50 on that one, huh? Now this one's going to take a little bit because I'm going to fit it over the whole 5-year period. This test does not work. Sure, it works. If this test does not work, then your strategy does not work, right? Because otherwise you're basically saying that there's some other technical factor that I can't put into backtest or something. How does that make sense? Like if I can't go and show a provable edge to the RSI itself over a 5-year period, what makes you think that it has any edge at all? Right? It's the whole thing. So you go in and you said, well, over the past week it's worked. Yeah, it could work over a week. That doesn't mean shit. That could just be random chance, man. Look at the performance of this thing over a long time period. It's not something you want to actually trade. You might get lucky one day. Yeah, goodbye session high, but look, they still a little hesitant to stay above 22.5. What is RSI? Okay. So RSI is basically how much is it going up compared to how much it's going down during the time period. Is like the gist of the math, right? Does that make sense? So it's kind of like a price action thing. It's like looking at the chart. It's like coming over here at this chart and looking at this chart and saying, okay, how many of these bars were up and how much were they up, and how many of these bars were down and how much were they down? Well, there's a lot more blue bars, right? And the idea of it is that when one side gets too strong relative to the other, that there's likely to be a pullback, or at least how he's saying to use RSI, because he's saying you buy it at 40 and sell it at 60 in the treasury, right? So what you're going to tend to find is that there probably is a tendency, like if we've just went up a lot, there's going to be a little bit of a tendency to go down, right? But it has a fat tail, right? When it doesn't do it, it's a complete disaster. And basically, you end up missing all of the best moves. Your test, yeah, okay, so that's exactly, I already used logic to disprove that idea. Okay, so what makes you think that if it doesn't show any kind of statistical edge in on its own, that if I combine it with a trillion other things that it still actually has edge, right? So if you've been trading that and you had edge and you made money from it, how could you say that the RSI did anything? The RSI could just be adding noise in it, and the edge that you came out with was you knowing enough about the news, right? Yeah, this is right. Can you imagine the greatest math minds universities produce crunching data and modeling things being beaten by an RSI indicator? Yeah, the point that I was trying to make, and the reason why what he said kind of triggered me, was he was like, well, my period is super secret, so I'm not going to share it with you. And so what I'm going to do is I'm going to show you that whatever period it is that you think you have, my computer can find it. Now, it looks like some of them after a 5-year period actually did come out profitable, but only because they took like 2 trades. Oh my gosh. That's funny AF. And only because of those trades happened to be in moves where they took profits and targets bigger than they were supposed to. So I think that we need to limit things a little bit. Okay. How should we do this? So first thing is I remember here yesterday, right? We were adding like the daily filter. Oscillators, RSI strat. Okay. I moved these into here, right? But I'm going to change it back to what it was so that you get more trades. And that it matches what he was saying it should be. Isn't it funny how I can come up with songs in my head while the stream is playing music too? Okay, there. And dun, 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 dun. Okay. Bang. Basically, I'm gonna have to save more results to be able to see what's actually going on. So, I can't use 5 years, basically. Basically, I can't use 5 years. So I need to come back and do the fitting on 1 year's worth of data, and then, okay. But then we also need to, let's see here. We might want to change what we're optimizing on. So this is max profit factor. And what I actually want to maximize on is max net profit. Okay. Well, so I can get up to, I actually think that my data provider will give me 10 years of back adjusted data if it's only price. See, this is the thing, is anything that is purely based on price, this is why I'm so incredibly skeptical of any technical system that is completely based on price, because it's very easy to test, right? So it looks like since we took those new highs, we've kind of been ranging here, and we're basically still sitting at where I got out. Oh, you know what? I wanted to change it so that it saved more results, but that's okay. Let's look at what we got here first. All the ones that came out there, there were the ones that were 0. Or is that because they were all just failing? Yeah, RSI period 20. Okay. Oh, because we need to do this. If close is less than the high and greater than the low. That's why. Okay, but that's good. That means that I can come in here. So keep number of results, and I'm going to keep 50. This is a little bit dangerous. This, if you're ever going in, you're back testing yourself in NinjaTrader, the more results you keep, and especially if you have it set to keep all of the data so that you can come in and look at all the stats for every one of those, the more of those that you put, the more memory it's going to use on your machine. Okay. So like coming in and doing a back test on like 1,000 of them and stuff that's when like you need more than 32 gigs of RAM. So this is about as extreme as I feel comfortable doing while I'm streaming without like it affecting the stream. So when I'm looking at this, it does look like the dollar kind of like it made its move and it's kind of like slowed down, and now we're getting ready for the open. So I think that my exit was actually really smart. Come on, there we go. There we go. Well, that one actually isn't too bad. So it wanted to use an RSI period of 30. Open in new strategy analyzer tab. Yeah, you know, I actually think I have one where I'm doing RSI on cumulative delta too, actually. Let's see here. Now I'm gonna come back and do just this one that was successful, right? January 2nd. Run. Morning, Kyle. Hey. Well, it's not a very good strategy though, actually. So I'm actually really impressed that this was profitable in the end. But look at this. Oh my gosh, look at the results on that. So like, yeah, it's profitable since 2020. Only since 2020, and really only in the past year. So that's why when you come back and you look at the Sharpe ratio on this, it's 0.13, which is terrible. Basically, the amount of money that you're making compared to the amount of risk that you're putting on is terrible. You might as well just use the index, right? Let's curve. That was curve fitting it though, Kyle. That was the thing. So he didn't want to tell us. He didn't want to tell us the period. So I was like, okay, let's go and take your strategy and go and do it by period. Now he's changing it. Now he's saying that it was on volume. So let me see here. I have my order flow ones. I had one where I did it on an oscillator. I think what I'm going to do is I'm going to take this. I'm going to make a new one called, new strategy called CD RSI. And then you take everything and paste it over here, right? Except for I'm going to add in here, at the very top, I'm going to say, what are we going to call it? Oh yeah, it's going to be called, CD. What is my indicator? I forget what I called it. I have a version of cumulative delta that works a little bit better for backtesting. Okay, CD equals CD. No, I have to go find it and remember what the name of it was. Maybe it's called. Oh, it's just cumulative delta 2. Cumulative delta 2. Cumulative delta time frame dot. Should we do it? Let's do it on session. We'll do it on session. There's a little bit of a breakout there based on the S&P 500 buying on the open. Okay. Oh, I forgot to rename it, but call it. Oh, wrong one. No. Them treasuries looking like they're gonna step up again. I'm super tempted to come in and trade it again, but I really think that I should wait until the PMI is in 10 minutes. Oh, my CD. Silly mistakes. Kind of sucks programming on stream because I make lots of little errors and then go and fix them in the compiler. I mean, I do that a lot. So you just miss things. And I definitely will make little errors here and there. A lot. Okay. So now this is where things get kind of messy. So instead of doing 5 years of data, we're basically going to do the last 2 weeks. And we're going to turn tick replay on. We're going to keep the RSI period 30. And hope that it works. One backtest on order flow takes way longer, right? Okay. So that really only ended up taking like 3 trades. Let's just do a period of 10. Is PMI the most important data besides the minutes, or is it housing data? I don't know. Really? Still only 1? 4. And they were all losers. One thing I could do is I could take this part out. That would probably lead to more trades. This was the thing that basically prevented it from doing stop and reverse. Because what could happen is you're going up and then you get a really big impulse the other way and then it's going to want to switch. And yeah. Anyways. Oh, actually, you know what? I didn't fix. I'm missing something too. Actually, that's kind of interesting that it didn't. Oh, that it only took 2 trades in that. Okay, whatever. Here's what I'm doing wrong. I'm not even using it yet. Durr. See what I was saying about like I make lots of mistakes. Okay, so we need to do the RSI of the cumulative delta. There they are at 22.5 again. Eight minutes, yeah. So we need this run of it to work, and then probably we need to focus again. Okay. Well, absolutely none of them worked. Which is actually kind of more what I was expecting, but I think we should pull this up here and pay attention a little bit. I'm going to try and explain to you why now. If I can get my stupid pen to work. Let's see if I've been having this issue with the pen where like if I restart things then it's fine, but like sometimes it just doesn't want to go. So what could happen is cumulative delta tends to, oh, okay, it's working fine. Cumulative delta tends to do something like this, where it's like it's moving and it's going up and you're like, oh, wow, like the cumulative, that's a really strong trend in one direction, right? And then it'll go goodish, right? So what could happen is you could say, oh, okay, I want to buy it here. I want to buy it here. And then you get pushed out of the range. So it could end up putting you in a position against a really big impulse, right? Because it has no way of adjusting, essentially. The strategies that I've done with cumulative delta and stuff like that are more like, okay, when I get a big impulse like that, and then based on the conditions, I try and do something, and those tend to work a lot better. But those have problems too. They tend to be kind of periodic, because what'll end up happening is basically the ones that I've found were the most successful. I'm going to give you a little secret here, okay? The ones that I found were the most successful is like you want to see cumulative delta and price somewhat correlated to each other. Like they're both trending up. And it's so that means that the order flow is being very indicative of where price is going to go as well. And then it's worth taking a trade. Okay, so I got out at 75. It's gone 15 more. I made 35. So that could have been a $50 trade before the news. You know what? I still think that I made an okay choice in getting out there, given the situation. But now that they've clearly breached 22.5, right? But here's the thing. What we might have been able to do. We might have been able to stay in that trade and still be in it and hold it into the news, because what if the PMIs are really bad, right? Because I'm going to bet they're on the downside. Well, what are we expecting? We're expecting 48. So anything below 50 is a contraction, right? So services we're expecting 48 and manufacturing we're expecting 50. It is the S&P composite, or it is the S&P PMIs, which is not as important as the market ones, because those, they're like behind. Okay. But let's just see what happens in 5 minutes. Yeah. Oh, you know what, Kyle, when you asked me that question earlier, I did not read it all the way. Is PMI the most important data today besides minutes, or is housing data? For treasuries, housing data has the potential to be more important than PMIs, because like I said, these PMIs are a little bit they're not the most up-to-date information, and so that's why they're not as big of a mover. But I actually think the one that is going to be, or the one that could really be important, is the sentiment, right? So we're looking for a reading of 55 versus a previous reading of 54.7. If those sentiment numbers come in under expectation, that could also probably rally the treasuries in the markets, right? Basically anything that paints the picture that we're basically in a recession and the Federal Reserve will have to reverse course quickly are kind of like the pieces of news that I think the market is looking at. So probably the University of Michigan sentiment is the most important besides the FOMC minutes. But overall, it's just a busy news day, right? Reverse course, weakened dollar, yeah. Yeah, that's what I would expect to see, is like economy is getting weaker, dollar gets weaker. Federal Reserve stops raising interest rates. Yada, yada, yada. And like the way that this market is structured right now, any big move in the dollar could like really push the markets really quick, right? I mean, like we would need a move that would take us from like 106.5 to like 107.5, you know. But if you had like a dollar move in the dollar, a $1 move in the dollar, that could move the equity indexes. Yeah. I was thinking about like, what do we call today's title? Because I don't want to make it disproving RSI again. But I think really the big thing that happened in this video today was that I took a trade based on the fundamentals. I got a fill, and it was quite a lucky fill, to be honest with you. And then I had to hold it through two really tense squeezes, and I stuck to my guns, and it really worked out for me, didn't it? So that was a really hard trade to take, and I think that was part of why I took it off early, which maybe tells us a little bit something about myself. I call a bluff when the market moves when I say so. I'm thinking, hey, you know, like you keep saying you need to be more aggressive. And maybe the reason why in some situations you're not being aggressive enough is because just to get the winner was really stressful. And so you want to take it off instead of trying to continue holding it because it's just too stressful. What time did I take it? Okay, so that means the PMIs were bad. Okay, 46.1. Manufacturing 47.6. Jeez. Okay, now you take it off. I don't think I'm willing to take the risk on that one. Look, the liquidity was completely gone, even here in the treasuries. Even here in the treasuries. It is coming back very quickly too, meaning that for me to have really made money on that, I probably would have needed to have limit orders out. And I don't know if I would have gotten filled in the micros. So... But then maybe that's another thing, is that if I really want to start taking risks, like better risks, I might need to be in the 10-year where there's the liquidity, right? Or rather, maybe it needs to be in ZN where there's the liquidity. Okay, so to review the numbers, services PMI 46.1 versus an expected 48. Manufacturing 47.6 versus an expected 50. Composite 46.3 versus 48. So all of those numbers came in lower than anticipated. Kevin, it would have been ugly if it went short, yeah. But I thought that the number was going to be bad. Do you see what I'm like? Like, that's a really, really big risk, isn't it? Thinking that you can predict what the economic number is going to be. What I have found keeping track of when I do this is that I actually am able to call it most of the time. Like maybe 55-60% of the time I'm able to predict which way it's going to go. But when you're wrong on those, it's nasty. And that's not a matter of a fat tail. It's just that you're talking about really big risk, really big reward, right? So it's not really a risk reward skew in that situation, right? Andre, I forgot about the news. Well, the S&P 500 really liked that one, didn't they? Pushing 40-30. Wait, is that a new? That's not a new high for the week for NES, is it? No. The highs before we started pulling back since that CPI was 40-50. 40-50 would be a way. I mean, if we closed before Thanksgiving at 40-50, that would be freaking amazing. But I highly, highly doubt that one. Yeah, can you believe I got out at 7.5? So I got $35 off of that. If I had held it through the news, of course I would have had to hold it through the news, but that would have been another $50 almost. Crazy. Okay, there is some iceberging going on up here at the top again. So we might get some of these kind of pullback areas. I am a little bit concerned. So one of the issues is that we've got another big number coming up in 10 minutes, basically, right? So I'm still hands off. And I'm not sure how much it pulls back in that time, if it pulls back. I mean, there was a little bit of a pullback there, but they came right back up to the top very quickly, didn't they? Oh, where was it, by the way? I was like, I'm skeptical they get to 25. They did get to 25 and busted through it. And now there's all three of them have a little bit of size above them. Well, okay, so that's an even number. But there's a corresponding one in the 5-year. That's curious. Also, we did see the spread steepen considerably. Yeah, we're seeing the spread steepen considerably. In other words, the play is go short 2-year, right? If we had gone short 2-year, imagine if we had taken that trade, but it was in the 2-year. 57, 3.5. Oh, it was about the same, about $80. Wow, they took that big order out at 113 even fast. This is kind of hinting that they're going to run quite a bit before this sentiment number. So here's another question for you guys, or something to consider. How much was the uptrend that we've had because of jobless claims versus PMI? Were they buying ahead of the PMI for PMI's sake? Because when I was taking that trade, all I was thinking about was the jobless claims. What's the name of the song? Life Crash. It's on the 100 Thieves Hype Tracks Stream Beats playlist. Streambeats.com. Streambeats.com, presented by Harris Heller. He's my bro. Of course, he doesn't even know that I exist, but I like that guy. Local here in Utah. What is going on? What do you mean, Lucas? Did you forget about the PMIs too? I'm like sitting here going, guys, you got to keep track of the news. But like last week, I made that very mistake, didn't I? I make that mistake all the time. I lose track of what I'm doing. I just forget. Oh yeah, there's news coming up here. I wasn't told I had to buy UST. Wait, what? Dude, the dollar is getting creamed now after these PMIs, aren't they? So that maybe that's the answer to the question here, right? Remember, I was saying how much of this move was the jobless claims versus somebody trying to trade ahead of the PMI and predict the PMI or something to that effect? Well, look at the dollar. The dollar they had this move down from 106.8 to 106.6. So a 20-cent move. It came all the way back and then came down. Compared to 40-cent move just since the PMIs. So I think that means the dollar thinks the PMI matters more, or that the combination of the PMI and the jobless claims. But the dollar's moving. Oh, the dollar's moving. Pushing below 30 half there now, huh? 5 minutes to go. Pretty cool too, and I was long one ES and felt like a movie. I'm glad that a lot of you guys are coming in and saying you were long ES. There was one move. Which was it? I think there was. I think it was the CPI move, where there was somebody that was like short, real bad. Didn't have a stop set and all that. Man, this is coming back hard now. Not really as much of a move in the dollar corresponding, but the treasuries are coming back hard. That one kind of looks like profit taking to me. Like there was these guys, they were long that move, and then they're putting their orders out here to get fills and take profits on the move, and then
maybe they sold the rest of it, and then there's other people that were long after this that are puking and whatnot. Yeah, this, these playlists can be a little bit hit and miss, but there's some dope tracks in it. And I definitely like the hype playlist because you get the combination of like upbeat energy, but also attitude. Whereas some of the other playlists are just way too cheesy and happy for me. I'm a serious person, I want attitude, want edge in my music. I like there to be a little bit of edge. Went long about 1 minute after the CPI. Holiday traders can push things and no one's there to stop them. Still a lot of risk for 300. I think you're right, Greg. So when this started, we were looking at the move earlier and we were saying, well, we know that there are some reasons to trade today. But it does look like at least one major player in the treasuries at least decided to take a vacation, right? And so that's why we had some of the action that we had earlier. Now the situation turns to, okay, so everybody has figured out that there is definitely reasons to trade today, and they can see the news and they see why those are reasons to trade. And now we're left with a market where like we have really strong buying flows coming into the market and not a lot of liquidity to stop it. So yeah, you get really volatile moves. I mean, the issue with that kind of action is that you've got to take your profits, right? So I think that given the situation, I made the right call. Come back to this chart, right? I took it basically here, I think, like 112.10 equivalent, and I held it to this distribution area up here, right? Which, let me tell you, was really hard for me to do, okay? And I got out before this, and then it came back, and then it went, right? This was before the PMI, and then the PMI was this, okay? So I did good, I got out. But you can just see, like, it can come back on you really hard. So that's why it kind of makes sense to take profits in that situation. If I had held it through that PMI, I think there was a good chance that I would get caught here. I would have been like, oh, well, maybe I can hold this all day, and then it comes all the way back on you, right? Like, that's the sort of thing that I have a tendency to do. So now the treasuries, my gosh, the treasuries are selling quite aggressively here, actually. 30 seconds before the consumer sentiment numbers. So here we're going to get these numbers. Usually the inflation number versus the conditions numbers don't come out at exactly the same time, but I'm going to be more interested in the 1 and 5 year inflation numbers, okay? There's like no liquidity in this market, and the micros are just completely pulled. Have fun with that. Okay, so expectations is higher than expected, 55.6. 1 year inflation, though, slightly lower than expected, 4.9 versus 5.1. The 5 year inflation is in line, 3%. And the new home sales, ooh, that's not good. Okay, new home sales is 7.5% versus an expected negative 5.5%. We could have a battle here in the treasury. I think that, well, I don't know, 55 versus 52. So for that, these are both in the same direction. These numbers are both bad for the treasuries. These numbers are both bad for the treasuries, in my opinion. Okay, so Michigan expectations final 55.6 versus 52.5. So that means that consumers are feeling better about the economy than expected. Okay, that is a positive for the economy, but a negative in terms of trying to tame inflation and expecting monetary stimulus and all of that. Why would somebody from Virginia call me? Okay, and then you also had there was the inflation number. The inflation number was a little bit less than expected, but not by too much. And that was the 1 year
number. Okay. And then we had new home sales. There was a lot more new home sales than we anticipated. And the homes, that was my voice. Home sales has been one of the key places, right? Remember, that was the part of the economy that like really overheated. Yeah. And has suffered the worst since the Federal Reserve has started raising interest rates. So for new home sales to be, they expected -5 and we got 7.5. That is good for the housing market, I suppose, but it is not good if you're expecting stimulus and so forth. So, at canceling out that move that we got off of the PMI, I think is appropriate. I don't know if it pushes down lower or not, but given the position, I don't think that I can take a trade off of that. No. I am ADHD, and I am medicated for ADHD. I tell you what, if I did not have the ADHD, I would not be able to just run off that whole slew of, okay, this is how you read the economic news that just came out. Yep, I'm on very, very teeny. It's like 5 milligrams. Like 5 milligrams in the morning. If I was not on it, though, it's like I can't speak. I mean, like, I pause a lot when I'm speaking anyways, but man, when I don't have it, every other word I'm struggling to find and stuff. Whereas when I'm on the medication and my brain is working the way a normal person's brain works, I can just run it all off and keep going and going and going. And I'm also a lot better at like, okay, here's the concept that I need to tell you something first and give you some background, and then I can make the point that I actually want to make. Because what'll often happen to me when I'm not on medication is I'll go off onto the other thing and then find a tangent in the other thing and go off onto that and then completely lose the point that I was trying to make to you. Your doc would never prescribe you drugs. I mean, if you listen, I am not your doctor. I am not a doctor. I'm not giving medical advice to anybody here. I am going to give some general information, and that is that if you are ADHD, being medicated will probably help you in your trading. Okay. So if you really think that you have an attention deficit problem, go and find an ADHD specialist. Okay. I mean, like, I know you can get that stuff from your regular doctor, but if you can find somebody, there's usually at least one person in every major city that specializes specifically in ADHD stuff. You can find one of those, it's better. Okay. Because first of all, they understand all of the nuances of the medications and will help get you on the right one is the first thing. And number two is that they know how to structure their business to accommodate the problems with ADHD more specifically. Like my doctor's office, when I'm done, I don't go and set up another appointment or something. Like, they call me. They will call me because they know that I'll forget, right? And if I do, and they have strong punishment for forgetting the appointment. If you forget the appointment, it's $50, right? They know how ADHD people work. Okay, I'm new to your channel and the new order flow style of trading. Do you teach how this works? Yes. So I do have a video series about order flow. If you go to my channel page, you should see it right there. It's up there, the order flow playlist. And that's going to give you like the information that you need to know to at least understand what you're looking at. But you're going to have to go beyond that, because really this is something that to really understand it, you have to be watching the order flow as it happens, right? And so that's a big part of the stream is, you know, watch those basic videos and then come and watch the live stream and look at how I put it into practice. And then hopefully you come in and you can do even better than me. We did make some money today though, so I'm happy. And all of everything that you guys have said here, it sounds like that you guys were on the right side of this, so that's good too. Does that make sense? So order flow is like a really, it's a really nuanced thing. Okay.
And the problem with just about any kind of technical statistical information about the markets is that there's so many things going on. When does it matter and when doesn't it, right? And when are you actually able to like pull useful information out of it and not, right? And that's kind of where sitting here and watching the stream and seeing it in practice really, really helps, right? Because I'm able to come in and say, okay, well, we had this move. What are the things that are moving? Why is the economy moving the way that it is? And then I can look in the order flow and I can say, okay, what am I seeing in the order flow that will tell me some things that about how I might want to try and play this. So today, for instance, let's just review again one more time for the new guy. We got in somewhere over here. We got a good move. We're saying, okay, this is a bad number for the economy, good for treasuries. We had this move up and then it came back. But look at the cumulative delta. This is the order flow right here. The market orders, all buys minus all sells, right? In this period, we came down, but cumulative delta was flat. So this was really just a liquidity hole squeezing out the buyers. So we held through that. I mean, it could have turned out really bad if we had broken new lows. I probably would have puked and I'd be feeling pretty bad today. But we held through it. And then we started seeing autocorrelated cumulative delta to the long side, indicating that somebody, a large meta order of buying over a long period of time was coming through for whatever reason. And then we came up to this point right here. Now, what do we see right here? Well, when we were watching the DOM, you could see a little bit of distribution. It was stuck in that area. There wasn't very much resting liquidity in that spot. It was just ticking back and forth across those points. And so I took my trade. That was a distribution area for me to take profits. Of course, we missed this, but that was because of the PMI news. And it was too fast for us to trade. And there wasn't enough liquidity in the micros for us to trade it. So cool. Right? So we were able to use the order flow information that we had to keep ourselves in a good trade and find a decent exit. And that was where order flow helped us, right? Just understand that there is more edge out there in the informational inefficiencies. Being able to read that economic number and understand what it means. There's more money in that. So I'm trying to make more videos about that stuff, but every situation is different. So that's why coming on the stream is really helpful. And after you've done this for a couple of months and you've been in the stream, you'll probably be pretty good. Or at least you'll stand a chance. Let's put it that way. Because I feel like what I'm doing here puts you in a spot where you actually stand a chance. It's still hard, even after all of that. Let's see here. What were you guys saying before that? I am just on coffee. Okay, so coffee will fill the receptor. So, okay. When you have the dopamine release in your brain, right? That activates all of these regions of the brain and it makes you feel good and so forth. And so, there's when caffeine comes in and fills those, you kind of get that and it satisfies you. So people with ADHD do self-medicate with caffeine. But in terms of making the frontal cortex fire quick enough, because the basic issue is there's not enough dopamine in those clefts, so it requires a stronger impulse for some of those signals to get through. The caffeine doesn't do that because it doesn't actually, like, it fills the receptor. It doesn't actually transmit the message. Does that make sense? So ADHD people will self-medicate with caffeine because it makes them feel better, but it doesn't solve the actual performance issue. So again, if you think that you have ADHD, there's these tests you can take that are like, okay, it comes down to like, how good is your executive functioning compared to a healthy person of the same age as you, right? You should go and see a doctor. I understand some of how it works, but it's kind of confusing at the same time. I'm trying to get away from trading candlesticks. Yes. Well, so here's how I would approach it. I really need to make a video about this, and I just don't know how to present it. Okay, but here's what you want to do. I do present this in some videos, but I have a video specifically about this thing. See, now I'm getting on tangents and being ADHD. Okay. What you want to do is you want to say, here was a move. Why did that move happen? Okay. So a technical analyst will say, well, it fit this pattern, and so there was this pattern, and then it moved up here because of this. That's not how it works. You want to say, people submit orders. Why did they submit orders? Right? I can come back here. Okay. So we had a range overnight, then we came in, and we had a opening move down. So the people on the open, they sold it for whatever reason. A lot of that is maybe technical. Then we had the news. We had, what was it? Oh yeah, jobless claims. Okay, jobless claims was significantly higher than expected, so we got this big buy. Okay, so this move, these orders buying came in because of jobless claims. Okay, then we came back. There wasn't a lot of a change in cumulative delta. But after a large move like that, you leave a liquidity hole behind you. So you're likely to see some sort of a pullback. In this case, it came all the way back. Okay. Then we got this meta order buying right here. So what was this? Maybe some of it was them saying, people, later on coming in and saying, oh yeah, jobless claims was bad. These things are all, these are reasons to buy treasuries, right? Could also have been people knowing that the PMI was going to be good and trying to get out ahead of time, right? So then we come to the news. Okay, big spike, people buying on the news. And then what happens after you get a really big, quick move like that? Liquidity hole, so they pull back. Okay, and then we had the other news. We had the sentiment and the new home sales. That did cause some selling, but not a ton. About 5,000 contracts worth of selling. Okay. After we were already long 50,000 contracts today. Okay. So from here, where do we go? Well, we've got all the news out of the way. There might still be some flows that come in during the day. I would expect the S&P 500 probably continues to buy here from this. But the treasuries are probably going to settle here. So now, since we don't have a reason to expect people submitting future orders, and it is a holiday tomorrow, after all, right? Now I don't want to trade, because ultimately what I want to do is I want to predict those future orders before they come. I don't want to see the future orders and then based on those orders, then make a decision after they've already hit the market, right? Then the trade's already over. I want to be in the market before those orders hit. Right? If I can predict it in any way that I can. And there's lots of different things that can potentially predict it, right? So going through every move and trying to see, okay, what was the news? What are the possible, so like that liquidity hole, that's a stylized behavior of market that can explain some of the price movement, right? Other things that you might want to look at are things like, how do large institutional strategies work? They rebalance at the end of the month. What kind of stuff do currencies do in the weekends? You will see movements in currencies on the last day of the month, and the people that are really into the currencies understand those a lot better. Okay. These sorts of things, right? And you go through every day and you do that. After a while, you start to get a pretty good idea of like what actually drives order flows, right? So that's why I say I wish that it was the case that that there was just a book, and I am trying to write a book to give you like the economic, like a lot of it is understanding all these economic indicators, understanding all of these strategies to kind of get an idea of the sort of flows that will come through. But even if you read my book, it's still going to be like, you've got to come in and see them and watch them a bit, right? And if you do that practice of trying to explain each flow that you see, or at least make theories about what might be driving them every day, that's how you learn. You're going to learn a lot faster doing that.
That's how you take something from something that people might take 30 years to figure out into something that maybe takes you 1 or 2 years to figure out. Okay. This is like the hardest song in the playlist, I feel. It's pretty nasty. Okay, so I was trying to go back to these questions Andre had. Can you be referred to them by your PCP, or can you just go to one of them? You can probably, for the one that I found, I just searched for ADHD doctor and set up an appointment with them. So, and then probably the first time they'll talk to you, they'll interview you to see that you actually have it, right? For me, it was not a huge deal because I had already been diagnosed as a child. So it was clear that I had it. I mean, the funny thing is that even when I'm medicated here on the stream, I think you can still tell that I have ADHD, right? And I think that, some people might be turned off by that. They might not realize that it's ADHD, but they might just be like, something about that Seth guy that I don't like. He's just too random. And people pick up on it subconsciously. It's kind of interesting. Do not say that, Lucas. Do not just say nobody but you, Seth, anticipated such a busy session. I am definitely after this stream going on Twitter and taking a little bit of a victory lap. Wait, did I tweet about it? Oh, well, I knew you would take the bait. There you go. Come on. I didn't say too much on Twitter, but I definitely said here on the stream, like, I think there's going to be stuff tomorrow. Pay attention. I mean, the bigger thing, look, we're having another move up. And there is some volume behind it as well. We have to love these types of days, yes. But the question is, and I would appreciate your opinion on this, Lucas, how does Seth get more out of these days? Because Seth took $35 when he could have taken 80. And maybe there's even more in it than that. And I'm not quite sure what it is that I got to do to really get the max out of these kinds of days. So there's been some days where I kind of knew that something was going to happen. Maybe more people knew in those other situations, but still situations where I knew there was opportunity and stuff, and I came out with nothing. That's happened, right? Because it was just like, wow, I don't like it. Conditions weren't right, It's like, it's so hard because I feel like I'm too picky. And I want to take the profits too quickly. But then when I really try and let it run, or I'm not as picky about the trades, it hurts me. So I'm kind of at a loss as to what I need to adjust to be able to get more reward out of when I'm on. Because we were on today, weren't we? We were on today and we basically missed half of it. I don't know. But the problem is not being able to get into the game once you see the action continues. That's what scalpers do. Yeah, maybe there's no way around it unless we wanted to be like swing traders, huh? Because like when I look at this chart and I look at all of this stuff, that's not necessarily action that I want to be heavily involved in, right? I would like to, if I held through that, I would hope that I took the profit right there and just ran, I mean, I do enjoy the added volatility, but there are some moves that come out of nowhere and can't be predicted. So to that point, I think with the info you had at the moment, you made a right choice. The problem is not being able to get into the game once you see the action. Yeah. I don't know. I think the issue is that like when something works out, it can be like something works out really well in the treasuries lately. It's like you make $50 to $80. Those are like the really big winners, right? When a trade doesn't work, I'm losing like 20. So it only takes like 3 or 4 of those to just wipe it all out, right? So the problem is, maybe the problem isn't that I'm not getting enough out of my winners. Maybe the problem is that my losers are a little too big still. Or that there's too many of them. Because certainly if I was able to erase, I had like 2 days this month that were bad, and basically gave up all of my profits on those, right? If I took those out, then I would be sitting so high right now, right? So now we're just kind of, we're a little bit up. We're a little bit up, and then we had the data fees. So still a good day. Still a good day. What was I on about before all of that? I don't know. It's kind of funny. There was like a lot of comments in the bonds yesterday, and now today not a whole lot of Twitter activity. Let's come back because I haven't been reading the tweets very much. Let's see if there's any commentary from some of the big folks that we missed. That was maybe, oh yeah, we do get, well, crude oil inventories at the bottom of the hour, huh? I mean, that's going to be interesting considering oil is down huge and is below 80 today. It's kind of funny. You've seen the S&P 500 is looking good, but is crude oil low? Oh yeah. Here, let me show you a chart of oil here. Here's oil, right? So we were already in a pretty nasty downtrend past, well, since November, right? Then on Monday, there was a rumor, well, it was a Wall Street Journal story that ended up being false that pushed us down, and we recovered that move. Now here today, we're not quite sure what the news might be, but something's been pushing us down. So we're having some movement here in oil. And now in about 5 minutes, we're going to get the gasoline inventories, which is the biggest piece of information that we get in the oil market in terms of what the supply is. So yeah, we're probably going to see oil move here, and it'll be interesting to see what it does. I guess what I could do is I could bring my 5-minute oil chart over here so that you can see that. Or why not we cover up the S&P 500 with it? I'm not going to resize it. I'll cover the numbers so that that's not confusing to anybody, but I won't resize it. Yeah. Gregor Orlowski, note to myself and anyone new because of my previous comment regarding the lack of larger market participants. At this point in the trading day, I wouldn't get too aggressive with tomorrow's holiday. Yeah. Monday was manipulation for sure. But who fed the Wall Street Journal the story? Is the question. Yeah, I was telling you should have it up. Yeah, that's true. You know what we could do? Because we have like 5 minutes. Let's just move that one back over there. And I will turn the tabs on this and duplicate in new tab and just set this one to CL. Or are we on January? Okay. There we go. Oh, and I have to change the thing, oil. So I have my indicator. I have like a couple of different options on what to display, and I'm telling it to just tell it directly. So I'm gonna say sweet, light, crude. Let's see what that looks like. No. Crude oil. No. CL. Sure. Changed my mind. We're just doing CL. Anyways, if Monday was manipulation, who was it? Was it somebody? Was it somebody in the US? Kind of wonder. That's my suspicion, don't you think? Don't you think? The FOMC minutes will move them. Yeah. Isn't that crazy? Okay, so yes, and now I remember. I was sometimes like into the singles was like, well, I wanted to do something or I wanted to sit and think about something, and now I can't remember what it was, and it always kind of leaves me oh, how do I put it? Uneasy and unhappy. And that was kind of in that moment, and now I remember. It was because of what Greg said. Okay. So Greg is right that from this point we have to be careful, because although there is pretty wide volatility and chop here in the treasuries, you're likely to get chopped to bits in this kind of action. And the later in the day it gets, the more difficult that sort of thing becomes, right? Now, the caveat to that is that you can get flows where some fund is executing something that is going to take them all day to do. And especially since the liquidity is relatively light today, that's going to make it that much harder for them to execute it, right? So that could be going on. I'm going to bet that isn't happening in the treasuries right now. At least the way that the order flows have been going since that PMI release and everything, I don't think that that's what's happening in the treasuries. But it could happen in ES. ES could slowly trend up all day. And then on top of that, we do have the FOMC meeting minutes, which could end up being a nothing burger, but it has the potential to really, really roil the markets, especially after everything that's happened this morning. So what I would recommend is don't quit yet, right? I don't have your hand on the trigger finger. I have my DOM disabled. It's on a sim account right now. Right? I did take that live trade earlier, but since then it's been on the sim account, and I'm just watching and waiting to see, because something could still happen, but I wouldn't be ready. I wouldn't be with my finger on the trigger. Yeah. Okay. So the numbers for oil here are a draw. So crude oil inventories was negative 3.69 versus an expected negative 2.614. But the gasoline inventories built substantially, 3 million versus an expected 1.15 million. So overall, that's probably, having a draw, that means there's less supply than anticipated. So that's probably good for oil price, but it's not really moving a whole lot yet, is it? No, the bar is slightly blue. I don't know. The oil seems to be saying that that's not a big enough of a change. So
reading this to it, so I'm going back to my tweets to see if there's any other tweets that I missed. Mohammed El Arain, the already pronounced process of widening and deepening U.S. yield inversion continues today, with the 2s and 10s currently trading a remarkable minus 79.6 basis points. Well, we did steepen considerably since he said that, though. That was about an hour ago. So that was when the S&P 500 opened. And nothing since then. Futures Trader 71, the level of spam now on Twitter has exploded. So many crypto airdrop spammers. Really? I haven't seen any of that. Surely if Twitter can figure out the user verification bit, then Twitter will probably get a lot better. I can only hope. But I tell you what, have you been seeing all this stuff on Mastodon? Because a lot of people have been getting into Mastodon, and I haven't really bothered using it yet, but I'm not too impressed with what I've seen about it so far. That was an interesting tweet, but I'm not going to read that one out. Oh, but the thing that I was reading that was kind of funny was Bitfinex was quoting somebody. Lol, Bitfinex, what a moron. He's been consistently proven remarkably accurate on his FUD by court documents and leaked papers. The only reasonable thing to say about the guy is he's just salty. Which is so funny because it's like that's exactly what it is like, he's been right almost every step of the way, but the only reason he's sharing all this stuff is because he basically tried to run his own Ponzi and got caught. And nobody else did. So he's really is just salty. And he like revels in it. I've never seen anything quite like it, and I think that the guy is just a glorious bastard. And I love watching his Twitter. You know what? Genesis didn't blow up this week yet. Is it all going to be okay? I had seen some things this week that were just like really like, oh my gosh, things could get really bad, but it never happened. It never quite went that way. By the way, where's my... The baby was in here and he stole my fidget toys. My fidget cube and my stress ball. The stress ball might have helped when we were taking heat on that good trade we had. I was just saying I got to take my victory lap. I'm not going to take the victory lap. I'm just going to admonish other people instead, without being like too specific about anybody, because I haven't actually seen anybody specifically on Twitter saying this, but clearly some people got caught off guard. Everyone took off this week? I don't know. You know what? Like, even on Monday and Tuesday, I kind of was like, well, I know that things tend to happen just before the holidays, so I figured that one of these days would be big. And there was some kind of suspicious activity earlier in the week, and it was just like, it just never completely came all the way through. So I think that there was people conducting business yesterday and Monday. Although on Monday, the market activity mostly ended up being that oil move, right? That one was interesting because, like, oh man, by the way, oil pushing lower now after that news. I don't know what's going on over there. Hold on. Let's try and dig a little deeper. There's got to be something going on. God gave us 2 arms for multiple vaccines. That's their lead story right now. Violent unrest rocks world's largest iPhone factory in China. I did see that this morning, actually. But now that's... Wow. Credit Suisse? We'll read that. Biden calls Virginia Walmart shooting. Hadn't heard about that one either. But you notice my policy is I'm not going to talk about shootings. Okay, that's my policy because I think that talking about it makes it more likely to happen in the future. Deeper surveys plunge deeper into likely recession. There's all this stuff. Okay, here we go. Oil prices fell overnight as the debacle of the Russian oil price cap scheme continues in Europe. The biggest news is that the EU ambassadors are considering setting the Russian oil price cap at between $65 and $70, which is around the level Russian crude currently trades at. A cap of $65 to $70 on Russian oil would not mean that much considering the discount Urals is currently selling at. Head of commodity strategy at Saxo Bank says Vital CEO Russell Hardy said, "I'm only imagining this, but it's going to be a number that looks like $60, adding that the cap will be set at a point where it causes the minimum amount of disruption because the market is still facing a difficult supply scenario. Particularly in the Europe Western banks, insurance companies won't want to participate unless there's an absolute clarity that the price is below the cap." Amid a U.S. holiday week-driven illiquid market, crude prices tumbled with the WTI falling back to a $78 handle. Ironically, as Bloomberg's Javier Blas reports, just days before the U.S. and Europe imposed fresh sanctions on Russian energy, supposedly the strongest thus far, Moscow has lifted its oil output to the highest level since its invasion of Ukraine. It seems European buyers are desperate to fund Putin's war before the sanctions hit. Russia has already made it clear it will not take this lying down, saying multiple times that it would not sell oil to countries with a price cap in place. In my opinion, this is utterly absurd, and this is an interference in the market mechanisms of such an important industry as oil, said Deputy Prime Minister Alexander Novak, who represented Russia at OPEC+. Companies that impose a price cap will not be among the recipients of Russian oil, a Kremlin spokesperson said on Friday, adding, "We simply will not cooperate with them on non-market principles." Former U.S. Treasury Secretary Steve Mnuchin panned the proposal to cap prices as not only not feasible, I think it's the most ridiculous idea I've ever heard. The chances of a G7 price cap on Russian oil being remotely effective are perhaps best summed up by a recent tweet from Bloomberg Energy and Commodities columnist. "My friends and I have agreed to impose a price cap on our local pub's beer. Mind, we actually do not plan to drink any beer there. The pub's owner says he won't sell beer to anyone observing the cap. So other patrons who drink a lot there say they aren't joining the cap's success." What is, of course, the most ironic thing about this oil price cap is the simple fact that once again, politicians can only think linearly and one step ahead. Their efforts to punish Russia and make this scheme as bearish as possible for oil prices, they will invariably drive the price dramatically higher as Russia pulls its exports from any nations that agree with the price cap, as they have explicitly warned. Okay. So oil is selling because of the price cap. The oil inventories number is not making any dent in that. But Zero Hedge is basically saying buy the dip, and I'm leaning towards agreeing with them. Although the question becomes, what's the correct price? Because last time this happened, right, oil went much lower before it exploded higher, right? And the issue is it could happen as soon as this holiday weekend. I wish I was more of an expert in oil, but I can't be an expert in everything, right? That's your job, Lucas. You tell us. You can come. You can give us your oil forecast. You can come in here and tell us what's going to happen. And Big offer at 28, by the way. Almost missed that. Why would you put one of them's out there? I actually suspect that that guy wants a fill. I could be wrong. I do have a book. Yeah, I get all of them. You want me to pull up a DOM of the oil? You don't have your own? Or maybe you're at work. Let's see here. And we want January 23. Tick multiplier of, well, to see what you want to see, we're going to have to use a tick multiplier of 1. I kind of like your trading today. You sound more confident. That's good. Well, it's easy to feel confident after it happened, right? Easy to sound confident after you already got the winner and I'm done for the day, basically. Nah, I'm gonna be paying attention. I don't like trading midday when I'm like still working, so I will refrain from trying to trade the FOMC meeting minutes, but I will keep watching for sure. Okay, well, I don't see anything too interesting on the DOM until we get to 77.74, which is quite a ways up there and before some of this more extreme downside. And then down, we got some big orders down at the low end of the day, so not sure if that tells us too much. $70 is where they want to fill the SPR. Oh, do you think that it'll let me see that far away though? Okay, wait, let me see here. So if I give my market depth 500, will it let me see that far? No, it won't let me see that far. My job is more like being aware and having the right information to understand which markets can affect. Well, yeah, I mean, that's where you got to start, right? But I think that what you also want to do is you want to be really diligent about reading the analyst reports to understand what major participants think about the future outlook of that particular market. Because then when you have a piece of information that comes in that, like, you know, directly contradicts those expectations, you have an idea that there's going to be more order flow that's going to come out of that, for instance, or, you know, this piece of data is more important than this piece of data and that sort of a thing. It's hard because you don't want to have, you don't want your long-term perspective to influence, you know, a short-term trade, right? Ultimately, it comes about, it comes from being able to predict the future orders in the short run. So you got to be careful with that. But I think that there's a real advantage to seeing the higher time frame. Excuse me, I'm getting hiccups. I don't know, oil looks kind of bearish to me. Well, shucks, yeah. But you are right. They wanted it to be at 70, didn't they? But are they actually going to get 70? You have to go. Thanks for stopping by, Lucas. We had fun. Yeah, well, so maybe that's what I should be doing, is I should be getting long the oil ETFs again. So, you know what? It's something really interesting I saw. I'm going to close that. I don't want to have that up because it's more data. It's more system resources. The cynic in me assumes that since they announced it publicly, oil won't ever touch 70. Yeah, I'm thinking it would come like just barely to it, but they won't actually be able to fill up the SPR at those prices. This is my guess. But you know what? I think that there's something else going on here, though, right? And that is we're going into a recession. I mean, it's kind of weird, isn't it? Like I was saying in my short yesterday, if you guys caught that here on YouTube or on TikTok, we're at the same levels of yield curve inversion that we were at when Lehman Brothers was going under, right? So if you were to look at yield curve inversion as a signal of like how freaked out the markets are per se, then you would expect people to be like running around with their hairs on fire and things burning left and right and firms going under and stuff. Well, it sounds like Credit Suisse is still stressed. Okay, but nothing crazy has happened yet. The market's not panicking yet. In fact, the S&P 500 is on a pretty good run here this month, right? What's with that? Well, you know, we are going into a recession, but it's not like breaking anything yet. And the market is actually kind of happy about it because that means that the Federal Reserve will stop raising interest rates. So it's kind of like the yield curve probably continues to flatten, right? But we may actually already be through the worst part, at least for market prices, you know, or at least we're in that kind of that spot. So it could be an area where you see oil go down simply because they think that demand is weak. So if you have weak demand and then you have this stuff that the Europeans are doing on top of that, right? That means price craters in the short term. You would think that it comes back up again when Russia kind of like causes problems with it, but the upside may be limited if the market believes that oil demand is still going to be considerably low. And the other side of this is, again, China is still doing really aggressive lockdowns. I need to learn when to breathe. Always breathe at the wrong time in the sentence. China is doing really aggressive lockdowns, and that is where a lot of the demand for oil comes from, right? So even though I think that I probably should be bullish, probably now is not the best position from a macroeconomic framework in terms of risk reward, because probably there are some negative pressures here. And I would want to see a situation where those negative pressures lift, you know, like China reverses course and says, that, well, we don't care anymore. We think that we've got everybody vaccinated. We're just going to open things up. Yes, that's what we were just talking about, live action, is that the Europe is going to go through with this oil cap. So it seems to be depressing prices in the short term. Buy oil at $69 a barrel. You heard it here first. Yeah. Well, that's probably is the better trade, right, Uzi? Is if they do get to 70, buy it, right? Buy it before the Biden administration does. That's the trade. Assuming that they actually fill it back up. To be honest with you, here's the thing. Okay. you gotta be careful trading against a government, right? And trying to buy it before the government buys it is, you know, you might see some crazy and shady things happen first, right? Because think about the college thing, right? Everybody said, okay, Joe Biden is going to forgive all of the college debt. He's only doing this for the election. And so the election comes through, and then just immediately after the election happens, judge comes in and says, no, this isn't going to happen. It's probably going to go to the Supreme Court, all of these things, right? And so then
Joe Biden says, well, you were supposed to continue payments in January, but now we're going to defer them until, wasn't it like until 2024? Like, it's basically like, I saw people on Reddit cheering that like this could be an issue every election. Can you imagine? Here we have all of this debt out there that people don't have to pay back. That's basically more money into the money supply, right? It's an inflationary force for 4 years, and then you're going to come in and tell people that they have to pay it, right? The politicians are going to have a hard time doing it, right? But my point is that the Biden administration is completely willing to come out and say something and make you think, okay, in January, then the things are going to come and then they're going to yank it away from you, right? And we kind of warned that that's what they were going to do. And it's like so brazen, right? So I kind of wonder with the oil, with the SPR, they come in and they say, well, we'll buy it at 70. And then it gets to 70 and they don't buy it. You watch. I don't know what the probability, I'm not saying that I think that that's going to happen. I don't know what the probability of that is going to happen, but that's the risk with that trade, right? So they that's the way they roll. Let me tell you something, Joe. You're listening. Of course, he's not listening. Okay. Integrity. Y'all, people on the left, I see this all the freaking time. Do you think that, oh, okay, like I can come out and I can manipulate the media and I can manipulate markets and I can get away with it? You think you're getting away with it. You probably get away with it in the short term. Okay. But integrity is something that has real benefits, all right? You can only pull that so many times before everybody just stops believing you, right? You come in and you say you're going to buy the SPR at 70 and then you don't do it. Well, I tell you what's going to happen then if that's what they do. Of course, it goes lower in the short term, but then as soon as they think that they're going to buy, the price is going to rocket up ahead of them and they end up getting a higher price anyways. People don't take kindly to being screwed around like that. You can't come in and screw over a whole industry over and over and over again and expect people to still want to play with you. All your P&L and zoom it. Wow. It was only $35 NASDAQ. Oh man. There you go. $35. Hide more of the account numbers. Joe B. I would much prefer politicians that when they say they're going to do something, like they say student debt payments are going to continue in January, that they do it. And there are costs to not doing, to constantly jerking everybody's chain. Joe Biden probably doesn't feel it too much, but I think the US is feeling it overall. Like you can see it with like foreign policy things now, right? It's like nobody actually trusts us. So they're like, well, yeah, you're saying this now, but the next politician that comes in is not going to honor those promises. Used to be, okay, if it was like Roosevelt, for instance, okay, back before, let's talk pre-World War II Roosevelt, right? Teddy Roosevelt, right? He said he was going to do shit. He did it, and he didn't make a big deal out of it. He just spoke softly, and then when he did the thing, it was whack. Did it. People trusted us because we knew that when we gave them an insurance, they were going to do stuff. It was the same with the Bush years. We gave people security assurances. We followed through with it. And now all of a sudden it's like, okay, so we're not going to help our allies in Afghanistan. Okay, what about your allies in Taiwan? What about your allies in South Korea? Like at what point, If you can't trust the next guy to follow through on the promises that the previous guy made, 'cause that's the way it used to be, there's costs for it for you in the long term, especially since those kinds of promises and those guarantees and strong relationships that we had with our allies is the primary source of American geopolitical power that's brought us so much prosperity. So there's Seth's economic diatribe for the day. Sorry, political diatribe for the day. I think the next intimidating thing in the stream is that the numbers are too small. You need a big... Yeah, well, I mean, for a while we did go with, like, we were showing the P&L somewhere. Like, it was showing up, like, underneath of my picture to see how much I was making. But I didn't like it because, number one, there was no real way to make that, like, look good and update automatically, and I would always forget. And then it was like, when I was losing, I didn't want to, you know, it hurt to come in and type those numbers. I guess that was a long time ago and things are very different, but... And then the other issue was that I felt like it kind of put the stream on a wrong focus, right? I want to be more focused on process than results. Does that make sense? Like, I mean, number one, I think that especially for trading, that's kind of the mentality that you have to have, because you're not always going to see the results that you want when you want them. It takes a long time period to see these things sometimes, right? And that's what's going to help you guys the most as well, is making sure that we show you guys a good process. No, just see if it's doable. Well, I can come in, what I can do is in OBS I can put a number up, right? But I have to, like, modify it manually. That's the problem. Actually, I might be able to look at, like, a spreadsheet, and I don't know, I could probably set up a process of it that does it now. We need to bump you up? I don't think that's the way to do it. I think the best, you know, it's something that you can do now that we haven't talked about. So it should be here on it now, on my stream now at least. I've never tried doing it. Okay, so here's my stream. Here's the screen that you guys should see, minus a couple of things. And yes, it is. So now we have the clip function. So you can come in and you can say clip. And you can say, okay, I want this point when Seth was saying this, right? And you just take it can only be a 1 minute clip, and then you take it and then you share it. Like, best part of the stream. Even if it's like something that I did that was stupid and it was funny. But even better if it was like I said something that you really liked. You want to share it with people. That helps the stream. Right? That's smart. Instead of whole thing makes sense. Yeah. But this just goes back to the same thing that I was saying with politics, right? How do I approach it? What are my values on this stream? Because is Seth's values make more money? No. Integrity, excellence, teamwork. That's what our stream is, right? And that's how we build the stream up, and that's how we get popular. And yeah, there are other things that you can do that might garner more attention, like coming in and, lying about things, for instance, making a big deal out of your performance when you're doing well and then ignoring it when you're not doing well, right? But anything that compromises the excellence, integrity, and teamwork, even if it would potentially make the stream more popular, I'm not interested, because those things are the most important. Say I want a clip when you talked about PMI, what should I do? Yeah, you go and you I mean, I already closed it, dude. Come on. I'm pulling it up. I'm pulling it up. Pulling it up. Okay. So you come to the live stream. Okay. You'll see the clip section. And now you should be able to go back through like the whole stream, right? So if you drag this window and you start dragging it back, you can literally scroll through like the whole video. Or like what you do is you come in here, discard clip. Okay. It was 2 hours ago. So you can go back and watch 2 hours ago right now, right? Find the spot that you want, pause, clip, and then, adjust the beginning and end of it until you have the right clip. And then when you have it, you add a description, and then you click share clip, and it will give you a link for it. And then that's how you do it. Yeah, that's cool. I mean, it doesn't. I wish that it automatically turned it into like a short that would then be added to my stream, but that's okay. And you can put it on like live stream fail if you really want. Like if something really, really funny happens, you could put it on live stream fail maybe. I don't know if I would do too well on live stream fail, but that's the kind of place that those sorts of things are posted. But yeah, just think about it. Just think about excellence and integrity, excellence, and teamwork, right? It's like, yeah, there are some other streams that are more popular than us now. But do they have as much integrity, excellence, and teamwork as our stream does? I don't think they do. So I'm okay. I'm okay with it. Obviously, we would like to be more popular and we would do the things that would be more popular, but we're not going to compromise our integrity, excellence, or teamwork to do it. I'm not going to come in and start taking 5 contracts on a sim trade every day, taking on excessive risk to get a teeny tiny little profit just so that I can go in and put $1,000, on the video thumbnail or the description, and I wouldn't come in and lie and say that it was live when it was sim. But even if it was live, I wouldn't be coming in and being, taking on excessive risk to get a teeny tiny little profit and then using that to make the stream really popular, when the reality is that it doesn't really reflect the risk that is involved in doing that and the long-term expectancy of that strategy. I'm not going to do that because I feel like that compromises the integrity and excellence. I'm misleading people about how realistic it is to make money from it. I'm misleading people about, that's something that's likely to blow up, and I'm kind of downplaying when I blow it up, right? I'm not going to do that. Yes, that means less people are going to be interested, because the people that are just interested in, oh, I want to day trade for a living and I want to find the person that's making the most money. Yeah, those people aren't going to be as interested, but I don't care. You clip the PMI here. Give me the link. I want to see it. Which one? What? I want to see. Oh, we did. Oh, wait, you can't post the link. You have to send it to me. That's how you talk. I know, right? Like when you're watching it after the fact, you're like, Seth, you pause a lot, and the way you talk is kind of weird and disjointed. Sorry. I've lost $30,000 feeling stupid because everyone else would make $1,000 a day, and then I realized it's all about being in the money. Screw everything else. Yeah, well, like it really can hurt you comparing yourself to other people, right? I mean, the first thing is just like in general, in social media, you're comparing yourself to everybody else. Like there's this video that's been going on around on TikTok where they're like, yeah, everybody has these like super nice expensive kitchens. How do they all afford that? And this person that's a realtor basically came in and said they're in debt up to their eyes. That's how they're doing it, right? But the bigger thing though that I want people that are trading to realize, because most beginners don't understand this and a lot of people really take advantage of that to kind of swindle them, is that you can make money quite consistently by taking on very extreme excessive risk. So it'll seem like you're making $1,000 every day, and what you don't realize is that you're risking like $5,000 to do that. And so when you get into a day that's bad, you just completely blow it. And you'd blow the account. Like, think about that. So you have these guys, and I don't like it because obviously you know who I'm talking about because NASDAQ Trader already talked about Matt. But like, you come in and you see him most of the days that he makes money. It's like he made $1,000, and then at least once a year he'll come in and tell you that he blew the account. And at least he's honest about that part. But he really does emphasize the winners, and then they kind of memory holes the losers. Right? So a lot of the viewers don't realize that the way he's doing it is by taking on excessive risk, and that it's probably not an appropriate strategy for most retail traders. I mean, I guess they're using combines, and so you're only risking the $150 a month that you paid for the combine. But wouldn't you rather just trade your own account and be consistently profitable? You know? I don't think that people really realize what the performance actually is, and what the risk actually is. He sent me the clip on. Yeah, let's see. Oh, you changed your. Did you change? No, that's just an older picture that you're using. Like, did he change his profile picture? Okay, let's look back here. It kind of moved on me. Okay, wait. The new squawk is saying something. What time did I take it? Okay, so that means the PMIs were bad. Okay, 46.1. Manufacturing 47.6. Jeez. Okay, now you take it off. That was funny. That one. Look, the liquidity was completely gone, even here in the treasuries. It is coming back very quickly too, meaning that for me to have really made money on that, I probably would have needed to have limit orders out. And I don't know if I would have gotten filled.
Bank of England still says there is still more to do on the bank rates to tackle inflation.
But then maybe that's another thing, is that if I really want to start taking risks, like better risks. Successful. What time did I take it? Okay, so that means the PMIs were bad. Oh, you kind of cut it in a weird spot, but that was funny. Like, you just end it right because it doesn't have to be a full minute, and just end it right when it says now you take it off.
It's a 5 minutes point answer. So I had to take a comment.
It's probably only funny to us because we have the context. Sorry, hold on. It's probably only funny to those of us that are here in the stream and saw me take my profits off earlier, but man, that was funny. Oh my gosh, it's 9:10. I'm like totally lost track of time. Guys, I gotta get going. But good day. I wanted to put in the title. Yeah, man, I didn't hear the number. Oh, it's because I changed my chart probably. Let's see here. Holding through heat after bad. After bad econ numbers. Okay, guys, I gotta get going. I will see you after the holidays, so next Monday. I won't be here on Friday. Okay. In the meantime, stay excellent, team.